Hey everyone, good afternoon. This is the final episode or final item in the series on coding for price action. I had not actually intended to do this video, but because we covered so much dense information in the previous sessions, I thought it would be useful to give folks who had been either using the code or experimented changing it and trying to adapt it for some of the either data they want to collect or some of the particular things that they're trying to do with EMAs in their trading systems. Um, I wanted to give everyone an opportunity to either ask questions about the code and how they could, expand upon it, um, or to discuss any issues they've had trying to modify it. But this is intended mostly as an open forum for you all to ask questions about how to use it, how to expand on it. And then also, I'll make some suggestions after we discuss that for some of the ways that you could, and how I've done some similar things with other modules to collect particular types of data that I use in my research. So let's start this off. Open it up to anyone who has questions, who's currently using the EMA bands for research or for live trading. Is there anyone who's been using it? Let me share my screen or share the trading view window. All right, so this is it, and let's just turn on the bands. All right. So just to remind everyone, this is the application that we're discussing and or indicator that we're discussing. Let me just hide myself. All right. So, who's been using this, and have you seen anything new about behavior around the EMA and thresholds where your expectations change and how you then modify your trading systems accordingly? All right. Well, drop your comments in the chat and keep it coming because there's a lot of opportunity here to explore some meaningful ideas that the EMA gives us about the our both our calibrated expectations and our first principles for thinking about price action. So, for example, um, this is transition below EMA, obviously, but no breakout and follow through below bands. Right? This is transition above breakout and follow through above the bands. And there's some other things happening here that you might develop other indicators to capture. Um, and we could talk about some of those ideas and subsequent series that we could do on that. But here, the behavior then transitions from spike to channel, obviously, and drifts back into the electric field of the EMA, but fails to even test. And then tests get still find buyers until we transition below. But how many of you are using day type classification as part of your top down analysis? Is that something that everyone is using during the day? Because one of the most important qualities of an adaptive trader and an adaptive system, and especially a system built around discretionary execution. I'm sorry, not fully systematic discretionary trading. So not fully discretionary execution, but based on all of the research and development that you do when building a system. Um, the great flexibility that you get as a human trader is the thresholds, the adaptable thresholds that you can use to determine when one of those first principle market states has changed. So if we know that the market can only always either be in a trend or a trading range, and we clearly have a strong bull trend and breakout and complete bull price structure, lower high major trend reversal, and subsequent two legs down. So this was one, two, and the lower high is prior to the second leg down. We know that major trend reversals typically become minor and result in trading ranges, which is exactly what we've gotten. So the selling of this pullback here and the calibrated expectations for breakout and weak follow through below the EMA on a previously bull day gives you key information about how to think about thresholds. And I think that as a system developer, one of the most important qualities that you can deploy across all of your systems and across all of your research is to think in thresholds rather than in absolutes. So at what threshold does the bull trend become, and bull trend and bull biased trading range become invalidated? Right? If we can't define that, then how would we trade a second leg? And how would we perhaps even fade a second leg in what we anticipate to be a trading range with a bull bias? How do we treat, how can we properly treat this bear outside bar 43 if we, if we try to sell the close or sell a pullback anticipating another second leg down, rather than seeing two legs down and one leg up, and then high probability second leg retest at least of 42 high. So there's a lot that you can get from both doing day type classification, but then using, and this comes back to this script that I wrote and that now you all can use in your research. Um, Once you've really fine tuned your expectations based on behavior around the EMA. I mean, the EMA is the simplest, most straightforward heuristic for market momentum, and we use it for regime classification in Systems Academy. But I mean, it is the best approximation we have for both trend lines and momentum. Flat EMAs, higher probability of trading range behavior, and thus, your expectations are deep pullbacks. Right, there's a lot of calibrated expectations you can get from it. But if you only see it as a single line rather than this range, you're also constricting those beliefs and expectations to a fixed point, and you can't really account for the subtleties and the nuances of the price action that develops within those bands. And so that's really why I wrote this particular indicator for this series on coding for price action. So, does anyone have any questions about the indicator itself, if you have or haven't used it, or on the first principles that the indicator is based on? All right. Well, then we'll keep it quick. Then I think that the next steps for someone who wants to continue using or to use this at all for research would be to spend time looking at basically correlating your context across regimes. So, what is the daily and your higher time frame regime? So, daily being the largest time frame you probably want to consider when trading intraday, and then you want to be aware of weekly and monthly levels, obviously, and conduct those as part of your top-down analysis. But the amount of time that the market takes to respond to those levels intraday can generate, a dozen trades, counter trend to a weekly signal that's going to, go in the opposite direction. So you don't really want to lean into those intraday. Whereas your higher time frame, say your 45 or your 45 or 60-minute time frame regime, daily and your 5-minute, give you a good constellation of context inputs, which you can use to weight the behavior around the EMA. And so if you are above your higher time frame, 45 or 60-minute EMA, and you have pullbacks, within the lower part of the band of your your 5-minute EMA, what are your expectations for trend resumption if you haven't had open gaps, right? So like you can conduct a lot of really sophisticated studies just using the data that this EMA produces. And then obviously you can add lots of other things to it. But the idea is to start from a first principle and to stick with that as the structure for your research, because then if you do that, then you're able to export it to all of your other markets that you trade. So if you trade ES, if you trade Bitcoin, if you trade crude, it becomes extensible to everything. And it gives you the ability to use the market context outside of the areas where you are producing signals to inform the signals, and thus once you really hammer down the signals that you want to trade, say buying below bad bear bars, so then tests here and then scaling in. So if you want to, I mean, there are a limitless number of things that you could research and test and even develop systems around. But the idea is that if you have this very finely tuned, calibrated expectation for what to expect around the EMA based on both day type and the various market regimes across your higher time frames, you can much more finely tune your expectations and the way that you treat your limit order entries across these ranges, or across this range of the Ali's electric zone of the EMA. So that's the idea. No, the paint. So Samsara asks whether we publish the paint barcode. This is the paint barcode that we use in Systems Academy. So this is not publicly available. This is my translation of Ali's code. So that's not available, but the EMA script is. And I have a few other open source scripts which I'm working on pulling some modules from my larger indicators. So a few other useful tools that have some different structural components of PineScript components that would be useful for people who want to code to look at as models for how to use that functionality. So there are a few more things that I'll be publishing in the coming weeks, but I have to pull them out of much larger pieces of code. So that's a work in progress. Any other questions? If not, we can keep it short and sweet. And the idea today was to just check in and make sure that no one has any questions. If you do have questions and you didn't join this in real time, leave them in the comments, and I will certainly check back in and read the comments and respond there. All right, everyone. And of course, as always, I've left a link to the EMA code in the description, as well as the link to the Systems Academy information. So anyone interested in Systems Academy can. So sorry, it says it'd be cool if we could stream more often, like daily. If I had time to stream daily, that would be something. I wish I could, but we'll work these in when we can, and drop your questions into the comments, and we'll catch up later. Yes, yeah. This is the Rishav asks if this is the same paint bar that Brad uses. Yeah, it's the same one that we use in Systems Academy. So everyone in Systems Academy uses the same paint bar to start their research process. We also have the reversal paint bar code and overlap code, and these are I translated them all for TradingView into PineScript, but students use them in either easy language in TradeStation, or in this case in TradingView. So yeah, it's the same thing. All right. Any other questions before I let you all go? If not, everyone can get back to the market, and have a great afternoon. All right. Catch you all soon.